We're talking about the business of hospitality during the holy month of Ramadan, and joining us in the studio to shed some light on this is Christopher Hewett of TRI Hospitality. Good to see you, Chris. Thanks for being with us.
Good morning. Thanks for having me.
We were just talking with the guys from Jumeirah Group, one of the big hotel companies, of course, here in Dubai, and they were saying that despite it being July and despite it being the holy month of Ramadan, occupancy levels at their beach hotels, 70 or 80%. That seems extraordinary. Surely the whole of Dubai and the UAE can't be enjoying such full hotels.
Well, occupancy during the holy month of Ramadan in summer generally is a lot lower than traditional peak months. If you take Dubai, for example, in the last couple of years, occupancies have ranged between 50 and 55%. And a lot of that is to do with the reduction in the level of demand within the corporate segment, which is generally focused on the city hotels. However, the beach properties are more leisure orientated, and with the cheaper rates that they offer, they generally bring in a lot more people there as well.
I did a quick, inexact science, but I did a quick search on the Jumeirah website to see how much it would cost me to book a room in Madinat Jumeirah this time next week. Over 1,000 dirhams, but again, that's probably not a particularly good example, is it? It's got a great location. It's one of the premium hotels. I guess elsewhere in Dubai, you can get a much better deal at the moment.
Yeah, average rates generally drop by about 50% during the holy month of Ramadan and during the summer periods. If you look at peak periods last year compared to Ramadan, you're looking at an average rate of $200 to around about $400 during peak periods. So there is that substantial reduction in average rate, and actually does have a big impact on the bottom line performance of hotels as well.
Right. Let's have a look at the Hotstats MENA Chains Hotel Market Review for May of this year. How did the local markets, Abu Dhabi and Dubai, fare in terms of occupancy?
Well, they did relatively well. Dubai had occupancy of 82%, which is very, very healthy. And albeit it was slightly lower than last year, and that's to do with a lot more supply entering the market compared to last year. So we've seen a marginal decrease in occupancies. However, rates were still stronger, and we've seen a lot more revenues coming through the hotels, and profit margins are very good as well.
And we saw the last time we talked, I think Abu Dhabi was keeping up its occupancy levels, but at the expense of the average room rate.
That's right, and that's a trend that's continuing through last month. But we see that we think that there's going to be a reversal of that downward trend with average rates towards the end of the year as hoteliers get more confidence in the occupancy being more stable and being stronger, and then they'll start yielding the rates towards the end of the year.
Let's have a look at the rest of the Gulf. Hotels in Doha demonstrated their highest occupancy levels for 3 years. Is this the start of the great infrastructure rush for the Soccer World Cup 2022, or is it just a general tourist influx?
I think it's a fact of there's a lot more demand coming into Doha. The new airport is open, so you've seen a lot more people coming through. Capacity was very constrained at the old airport within Doha, but you're also starting to get more of a balance when it comes to supply and demand within the market. The last couple of years there's been a lot of new supply entering the Doha market, and now you're seeing a lot of a leveling off of that new supply, and demand is kind of balanced out with that, so that's why you're seeing more occupancy increases.
We know, Chris, that one of the buoyant markets within the Middle East and North Africa over the past year or two has been Jeddah. Dubai has been one, and Jeddah has been one of the others. What are we seeing happening in Jeddah towards the end of this year?
Well, I think Jeddah is going to continue to be strong towards the end of this year. Occupancy levels are still very strong. Hoteliers are yielding higher rates, but if you look at sort of a bit more long term, the next 2 years are going to be challenging. You've got roughly 6,000 rooms coming into the market over the next 2 years, and a lot of that is within the upscale or 5-star segments. So we anticipate there is going to be a reduction in occupancy, and also a reduction in rates as new hotels enter the market and penetrate the market with more affordable rates.
Is there an argument that says there will be supply-led demand? In Dubai, for the last 10 or 15 years, there have been scaremongers saying, oh, there's so much new supply coming up in Dubai. In 2 or 3 years' time, occupancy rates will sink and so will room rates. And it never happened because that new supply generated new demand. There was more of an offering and more people came. Could the same economic dynamics apply to Jeddah?
I think you can't really compare the two. Jeddah doesn't have the diverse range of demand generators that Dubai has. Jeddah is still very much domestic driven when it comes to domestic tourists, although corporate demand is a key driver of room nights of demand in Jeddah. A third segment that they are able to leverage, and that is the religious tourism. Obviously, that's the gateway to the two holy cities, and Saudi Arabia has the ability to turn on the tap, so they say, when it comes to religious demand by increasing the number of visas that they allocate to the Muslim world.
Since just about the start of this year, I think every time you've come in to talk about these reports, the one thing that's surprised me has been how strong Kuwait has been. How did that fare in May?
Kuwait had a reduction in average rates. Occupancy dropped to roughly 52%. Now, Kuwait is an interesting market because they have essentially what they call a rate cartel. All the hotel owners throughout Kuwait have an agreed minimum rate that they will charge the market, and that's to try and prevent rate wars from happening and obviously eroding profits. So there's minimum rates that are applied for 4-star and 5-star hotels. So regardless of the occupancy dropping to, say, low 40s or high 30s, the rates will still be relatively high, which helps keep performance levels quite strong.
Chris, two of the weaker markets in this region have been Egypt and also Lebanon over the past year or so, for obvious reasons. Do we see any catalyst that could boost tourism into Egypt and into Lebanon over the next few months, or perhaps even year or so?
Well, I think with Egypt is probably in a better position. The presidential elections are now over. President Sisi has now been elected, and I think there's going to be a lot more security and stability within Egypt. Once that returns, you'll see a lot more confidence when it comes to the travel agencies and their bookings, and also a lot of governments will probably lift their travel warnings that they have to citizens. Lebanon, unfortunately, because of its proximity to Syria and a lot of the issues flowing over from Syria, I think they're going to face a lot of instability over the next year or two, certainly until Syria sort of calms down and that issue is resolved.
So if we focus now again on the Dubai market, we know it's buoyant. Even in summertime, the Dubai market is buoyant. Tell me about the things that hotels are doing or are going to have to do to differentiate themselves in what is a very, very crowded market. Malcolm, you made the point, didn't you, last week about the Palm Jumeirah? So many new hotels being developed there when we had the chief executive of Nikhil in. And you said, I think it was, how many is too many? Even for a buoyant market like Dubai with, as you say, Chris, multiple demand drivers, surely there is a limit to how many generic 5-star beach hotels we can fill.
Well, I think if you're looking at how will Dubai differentiate it, you look at the mid-market segments. There is a lack of good quality 3- and 4-star hotels that are out there. If you look historically, Bur Dubai and Dera have been the centre point for this, but you're starting to see a lot more coming into places like Al Basha and TCOM and even JLT. Boutique hotels is another one that people are starting to talk about and starting to explore. Products that are very service orientated, they're very unique in the service that they provide, and you're going to see a lot more hotels come in. Me by Melia, which is one that's opening up in Business Bay in a couple of years' time, that is a very lifestyle driven property. You've got the W that's going to be opening within the Huptor City project. These are all products that are going to be very unique and cater to specific clientele and help try and provide a unique and different service experience to the generic 5-star properties that are around at the moment.
Let's talk about Eid, which is, of course, just about 3 or 4 weeks away. Typically quite a busy time for the hotel industry here. What is your research telling you about the forthcoming Eid, falling as it does between July and August, typically a weak time for tourism industry here?
Well, Eid is generally a very busy time, regardless of when it is. And in the last 3 years, we've seen the occupancy levels shoot up into the high 90s.
Is that just Dubai, or do you see it elsewhere around the region as well?
No, generally you see it in Bahrain, Abu Dhabi and Dubai. Those are 3 markets that experience it. Kuwait to some extent as well, as they attract a lot of Saudi demand from northeast Saudi. But occupancy levels really do drive up, especially in Dubai, where they have the promotional campaign of Eid in Dubai and the likes, where they try and draw in as many regional travellers as possible.
Well, Chris, we look forward to having you in the studio to talk about the summer months. June will be the next one out. Christopher Hewett, Senior Consultant at TRI Hospitality Consulting. Thank you very much indeed for your time.
Thank you very much.